The Federal Reserve lies. They lie to you about monetary policy in order to gain more power out of their words. They use their words to guide markets. That is what has taken place right now. We can see the absolute rally taking place within the stock market, and this is absolutely falls right in line with the credible threat theory. I mean, I can never be more happy with the understanding that I have developed over the years using the channel, using the information that the people have communicated with me through the comment section, through emails, in order to develop the most accurate theory when it comes to monetary policy. This is it. I've got it here. Just today, we had Jerome Powell out there giving a speech, and he admits to lying. He admits the credible threat theory. He straight up just spills it out for you. All right. Now, I'm not going to go through the entire article, but I did want to go into some particular comments that were made out of this article. I left the link down in the description. We have been talking about the makeup strategy, talking about flexible average inflation targeting. We have been talking about how it is that the Federal Reserve has been using their words to guide markets in order to maintain and keep an elevated inflation expectation in order to save their monetary policy. Most people were so confused by this, they thought that I was just making it up. I didn't. And now he admits it. Like, straight up, the Uneducated Economist absolutely nailed monetary policy. Listen to this. Right? It goes on to say this. Let me go back into this article. It's at the part where it says importance of the Fed independence. While not addressing the White House demands for lower rates specifically, Powell did note the importance of Fed independence. He goes on to say, FOMC members will make these decisions based solely on their assessment of the data and its implications for the economic outlook and the balance of risk. We will never deviate from that approach. He goes on to say, or the article goes on to say this: the speech comes amid ongoing negotiations between the White House and global trading partners, as situation often in flux and without clarity on where it will end. Now, this is something that I have been talking about for quite some time. Nobody knows what the tariffs are going to do, right? Up, down, sideways. Don't know what the hell the tariffs are gonna, like, is there exemptions? Is there workarounds? Like, what tariffs, right? And this is the fear, uncertainty, and doubt that is created that elevates the inflation expectation. The White House was totally involved in that. Recent indicators show consumer prices gradually pushing higher, but wholesale costs up more rapidly. So there's inflation that is coming on account of all this. From Trump's administration view, the tariffs will not cause lasting inflation, thus warranting a rate cut. Powell's position in the speech was that a range of outcomes is possible with a reasonable base case. Right? That's the quote, base case. Reasonable base case, being that tariffs impacts will be short-lived and one-time shift in the price levels that likely would not be cause for holding rates higher. However, he said nothing is certain at this point. So again, this is the fear, uncertainty, doubt, the confusion that everybody is now looking at. Man, what is it going to do? Is it going to create inflation? Is the Fed going to have to fight it? These tariffs, right? All right. In addition to summarizing the current conditions and potential outcomes, the speech touched on the Fed's, this is it, this is my favorite part of this whole thing. This is the reason why I even brought this up. The Fed touched on the 5-year review of its policy framework. The review resulted in several notable changes from when the central bank last performed this task in 2020. Now, again, it's referring back 5 years. It's saying, hey, 5 years ago, the Federal Reserve made a profound change to their consensus statement. This, what do they refer to it in here? The 5-year review, right? In here, they call it the 5-year review. It's the consensus statement, the statement on long-run policies and monetary policy strategies, right? The review resulted in several notable changes from when the central bank last performed the task in 2020. At the time, in the midst of the COVID pandemic, the Fed switched. Right here, this article admits it. The Fed switched to flexible average inflation targeting regime that effectively would allow inflation to run higher than the central bank's 2% goal. Bang, right there. They never tried to get it down to 2%. All these people who had it stuck in their head that the Federal Reserve was trying to get to a 2% target were absolutely lost on monetary policy. Right here, it admits it. They were trying to get to flexible average inflation targeting, meaning that they were going to let inflation run extra hot, extra long for an extended period of time. Right? It's admitted right here. They were never trying to get to a 2% goal. 99% of the people missed that. Literally missed it. I've been trying to share it with you over and over and over again, and this CNBC article is finally coming out with it, right? Like in the mainstream media admitting, no, you're right, man. They were not trying to get to 2%. They were trying to get to moderately above 2% for some time. This is the makeup strategy. It goes on to say this. Let's see here. It says running higher than the central bank's 2% goal coming after a prolonged period of attempting holding below that level, right? They weren't holding, they were trying to hold it above it, they just fell below. All right, the upshot that policymakers could be patient with slightly higher inflation if it meant ensuring a more comprehensive labor market recovery, right? So they're giving excuses for this. They're like, well, hey, you know, if the labor market is still good, then we're going to keep this thing elevated. Well, no kidding. Right? Because you wanted elevated inflation, elevated interest rates to raise the neutral interest rate. And if the labor market is doing well, well, then hell, that's right in line with what it is that the Federal Reserve was looking to do. Right? Goes on to say this. However, shortly after adopting the strategy, inflation began to climb, ultimately hitting 4-year highs, when policymakers largely dismissed the rise as transitory and not needing rate hikes. Powell noted the damage impacts from inflation and the lessons learned. Right? They're like, oh man, that hit us way harder than we were expecting. And everyone went, yeah, no kidding, Powell. You screwed up. Inflation expectations started to rise. It was part of the game. They wanted elevated inflation expectations. Them admitting they screwed up elevated the inflation expectation. They got even more power from that. Remember, they wanted elevated inflation expectations. They wanted the people to believe it. They had inflation expectations running consistently, persistently too low leading up to COVID. Goes on to say, as it turned out, this is quoting, as it turned out, the idea of an intentional, this is right here, he admits it, the idea of an intentional moderate inflation overshoot had proved irrelevant. See, like they had a plan. They were like, hey, we're going to try and push inflation higher. This is in 2018-19. They were coming up with these ideas. It was called the makeup strategy. They were like, hell, man, we got this problem. We printed up all this money and we failed to produce an inflationary scenario of it. How is it that we are going to make up for the fact that we ran under the 2% target for so many years? And they're like, hey, we got this makeup strategy that we can deploy. And it all of a sudden became irrelevant to use the makeup strategy because of COVID. Oh, man, what a coincidence. What a coincidence. Holy moly. So the Federal Reserve had a game plan to create an inflation expectation that would be extremely elevated in order to make up for the fact that they failed to achieve the 2% target, and COVID made that makeup strategy irrelevant. It wasn't like they didn't want it, right? I mean, they wanted elevated inflation. They had a whole game plan for it, but then when COVID kicked in, they were like, well, we don't need that game plan anymore. We got all the inflation we need. Yay! Right? How many people are missing this? Everybody, literally everybody is missing this. I can't believe it, right? Because I'm so glad this article came out. You guys can tell I'm excited about it. All right. Proved irrelevant. There was nothing intentional or moderate about inflation that arrived a few months later after we announced our 2020 changes to the consensus statement. As I acknowledged publicly in 2021, Powell said, the past 5 years have been a painful reminder of the hardship that high inflation imposes, especially on those least able to meet the higher cost of necessities. Well, you knew you were going to do that, Jerome. Bro, don't try and say like, you know, oh, sorry, man, we didn't know that this was going to happen and that all this pain and suffering that the people were going to experience, well, we didn't intend for that to happen. Bull. BS, bro, you admitted it back in August of 2027. Do not try to sugarcoat that stuff as if you didn't think that it was going to happen. You said this. Jerome Powell had this to say back in, let me make sure I got the date right here. Whoops, I just missed it. This is August 27th, 2020. This is before inflation. This is before the COVID kicked in. This is before the makeup strategy was deployed. This is before all that stuff. They had the idea. We want inflation to run persistently high. And he said it back in August of 2020 before anything went down. Now, in this speech, he says this. The persistent undershoot of inflation from our 2% long-run objective is a cause for concern. Hey, what's up, buddy?
Hey.
I got my... You want us to come over and say hi? All right, hold on. Freddie just dropped me off a coffee, man. Isn't that nice of him?
Yeah.
Yeah? What you guys up to?
Just going downtown.
Just going downtown to hang out for a while?
Yeah.
Right on. Thank you.
Yeah.
All right, we'll see you later, bud. Isn't that a cool surprise? Right on. Okay, see you, bud. Waving to my wife there. All right. So it says this: the persistent undershoot of inflation from our 2% long-run objective is a cause for concern. So they knew it back in 2020 that they ran persistently under 2% and that they would have to figure out a way to solve that problem. He goes on to say this: many find it counterintuitive that the Fed would want to push up inflation. No kidding. Some people get very angry with the idea. Some people didn't think you were trying to. Some people think you screwed up and allowed it to happen by accident. No, it was totally on purpose. They wanted elevated inflation expectation, and they wanted to be persistently above 2% because it had been running under 2% for so long. Again, this is coming directly from Jerome Powell in August of 2020. Goes on to say this: after all, low and stable inflation is essential for a well-functioning economy, and we are certainly mindful that higher prices for essential items such as food, gasoline, and shelter add to the burdens faced by many families, especially those struggling with lost jobs and income. No kidding. You think that people down at the bottom end can take even a little bit of a hit? No. They lose a day of pay, it's devastating. If inflation goes up just a little bit, it's devastating. Right? The people at the end of the line suffer the most. And yet here in this article, you want to be as cunning as to try and say, what did he say? The past 5 years have been a painful reminder of the hardships that high inflation imposes, especially those least able to meet the higher costs and necessities. Well, no kidding. You knew it was going to happen, bro. Like, you straight up knew it. You knew you were going to do this to the people. If you didn't do it, you were going to lose your job. You were going to lose everything that you had. You were going to lose all your buddies, and all their rich, crony, capitalistic behaviors were all going to crash if you didn't do this. He admitted it 5 years ago and just admitted it again. Like, hey, man, pain and suffering is going to be felt by the people. Sorry, but you're going to have to face the consequences of it because, it's really bad if we don't create this inflationary scenario to save the monetary policy. Don't let them pull the wool over your eyes. Do not let them do this to you. Right? As it turned out, the idea of intentionally moderate inflation overshoot had proved irrelevant. Yeah, it sure did, because you had the plan to do it and didn't need to because COVID saved the day. Yeah, hey, that monetary policy, just go ahead and close that thing up with that makeup strategy and just go ahead and set that up on the shelf. Maybe we'll deploy that sometime in the future. We don't need that anymore because we got COVID taking care of business. So sad. All right. We believe that our commitment to this target is key factor helping keep long-term inflation expectations well anchored. Well, wait a minute, bro. What commitment to the target? That's a little confusing. What target is it you're talking about? Because if we go back and we look at your speech, right, there's something that you have to actually say about that. Let's bring it up. The persistent undershoot of oh, wait a minute. I already read that part. Down here. Here we go. It says, to prevent this outcome and adverse... Hold on, let me back it up a little bit. We have also made important changes with regard to the price stability side of our mandate. Our long-run goals, the long-run goals continues to be the 2%. Our statement emphasizes that our actions to achieve both sides of the dual mandate will be most effective in the long-term inflation expectations remain well anchored at 2%. You see, they're not talking about a 2% target. They're talking about some point in the future. Your expectations of what it is that they're going to have inflation in the future, they want that locked in at 2%. That's the only 2% target there is. Your expectations. The reality where they want inflation today, very different. They don't have a 2% target. That's the long-term inflation expectations. Goes on to say this. However, if inflation runs below 2% following economic downturns but never moves above 2% even when the economy is strong, then over time inflation will average less than 2%. Households and businesses will come to expect this result, meaning that inflation expectations would tend to move below our inflation goal and pull realized inflation down. You see the problem that they had? Persistently below 2% was pulling the long-term inflation expectation down. That was their problem. They were losing that long-term inflation expectations. To prevent this outcome and adverse dynamics that could ensue, our new statement indicates that we will seek to achieve inflation that averages 2% over time. Therefore, following periods when inflation has been running below 2%, appropriate monetary policy will likely aim to achieve inflation moderately above 2% for some time. That's what their goal was. That's what they were intending. They never had the idea of bringing it down to a 2% target. That is not the case. They were wanting moderately above 2% for some time. Here's the kicker to it all. In seeking to achieve inflation that averages 2% over time, we, the Federal Reserve, are not tying ourselves to a particular mathematical formula that defines the average. Well, isn't that convenient for you guys? You don't have a mathematical formula to figure out what defines the average. You don't have a mathematical formula for that. Well, that's pretty interesting. Like, how do you figure out the average inflation then, right? Goes on to say, thus, our approach could be viewed as a flexible form of average inflation targeting. Our decisions about appropriate monetary policy will likely continue to reflect a broad array of considerations and will not be dictated by any formula. Everybody got it wrong. Everybody missed it, right? Everybody missed this. They did not get it. They did not see that the inflation was going to run extra hot, extra long for an extended period of time. And everybody who fell into the hyperinflationary scenario belief totally benefited the Federal Reserve. He is admitting that 5 years ago, and he had admitted it again today, but people cannot see it. They literally cannot see this. I think to myself, man, how is it that I am the only one who seems to be consistently out here saying the exact same thing over and over again, only to be proved right time and time again, right? It's amazing to see it. Here's the top kicker of it all. Everybody's all worried about the interest rate cuts. They're thinking about cuts in September. What is this going to do? Cut, right? What is it going to do to everything? Think about the expectations that people have right now and what it's doing to the stock market. Right? Stock market's rallying on the idea of a September rate cut. It's kind of stimulating, you know? People going out there, taking out mortgage loans. That's starting to increase. You have all these people who are then looking into the economy thinking, man, better times are coming. And they're starting to act accordingly. Well, who's been saying they are using their words the entire time, right? They haven't done anything. They haven't done anything yet. They've used some words, they deployed information, the people have received it, and they are now behaving in line with what it is that the Federal Reserve was looking for. You want to stimulate the economy? Use some words. Put the belief out there. Fear, uncertainty, and doubt. You can control the outcome literally by deploying information. You don't have to do anything. Okay? Philip Jefferson, voting member of the FOMC. This is a speech that he gave February 21st, 2025, just a few months ago. He says, using textual analysis, high-frequency asset price data, and high-frequency central bank communications data, this research shows that investors' reactions, what we are experiencing today, the investors' reactions to specific sentences communicated by the central bank, right? Looking like things are warranting an interest rate cut, is quickly incorporated into asset prices. Stock market rallies. Boom! They didn't have to do anything. All they have to do is deploy the information. You see how well it works? I mean, here it is. Clear as day. Perfect example of it. Right now, taking place today, showing you that they have done nothing and they have stimulated the markets with incorporating it into asset prices using their words. Totally worked. Okay. Goes on to say this, policymakers know that the communications are likely to affect the course of short-term interest rates, asset prices, and associated economic outlooks, resulting in an easing or tightening of financial conditions. Think about it. The idea, the expectations of them lowering interest rates going into the future started dropping mortgage rates. People started going out there and borrowing money to buy houses. Started stimulating the economy. It was easing financial conditions. Like, I don't know how much more that they need to admit to you in order for it to be seen. Like, they are straight up saying they're doing it to you. They say that they're going to do it to you. Then they do it to you. What else do you need to know? Right? This is it. This is the monetary policy in the most accurate raw form that you can get. The idea that the Federal Reserve wanted elevated inflation expectation was admitted by Powell today, if you know how to see it. Most people will read those comments and think that they screwed up, fighting it, battling it, having no clue that 5 years ago, this is exactly what it is that they were looking for. This is the situation they wanted to see. This is the way that they wanted to condition the markets to be hung up on every word that the Federal Reserve uses in order to create easing or tightening of financial conditions, knowing that the specific sentences that they use will be quickly incorporated into asset prices. How many people are able to see it this way? Very few. Very few. Because I know how it is that the Federal Reserve is conducting themselves, it's given me what I feel is the power in order to position myself the most appropriate way. This is not a surprise to me. Everything that has taken place right now, the rally in the stock market, the deployment of the information, the easing of the financial conditions, everything is not a surprise to me, falls right in line with the credible threat theory. Straight up. All right, thank you all for being here. Let's take a look at some of these comments before we call it quits. I see a super chat up there. Let's go check that out. This is why we need Kamala. She wouldn't have allowed this F Trump. Absolutely. I mean, I really appreciate the $4.99, but you are absolutely incorrect. That is, I mean, it might have been a different story that was being told, but this is definitely the situation that we would be in when it comes to the economy, when it comes to financial markets, when it comes to the interest rate setting, all of it. This is not any, Kamala would not have made this any different. The flavor of the experience would be somewhat changed. Like here, this is a good example of Taco Bell politics, right? When you walk into Taco Bell and you look at the menu and you're like, oh man, what looks good up there? Are you really serious? You know, it's like, it's all the same ingredients, just combinations, just different combinations. It's all the same beef, it's all the same chicken, it's all the same stuff. It's just different combinations in a different wrapper, but it's all the same basic ingredients, and they just combine it into different forms in order to give you some sort of idea that you have a selection, right? But it's all the same. I mean, what do you want? Do you want beef or chicken, soft or crunchy, with or without sour cream, spicy or mild, right? I mean, and that's essentially it. And then you have the different wrappers that they come in, but they're all essentially the same ingredients. That's politics. That is Taco Bell politics that we are now facing. You can go in and say, hey man, I want this person or that person or whatever you want. It doesn't matter. The delivery will be the same. It might be shaped up like a soft taco. Well, hey, you know, that's not exactly what I want. I was hoping for a burrito. It doesn't matter. It's going to be the same ingredients. Eh? It might look different. You're like, I don't like those tacos. You know, it's just like, yeah, okay, so you like the burritos? Like, what's the difference? Nothing, right? I mean, I understand the shape is different and maybe there might be a little, like, subtle differences that's inside of it, but the outcome, it's all the same. Yeah. All right, let's scoot back up here. Boom. Okay. Good job, Simon. Good time to sell assets. Not me. I didn't sell assets. I loaded up on even more. Like a lot of you know, the ETF that I have been following, tracking, and buying into, which is a complete speculation. I wouldn't suggest it for anybody. It's a position that I have taken. A lot of you know what it is. I bought some more this morning. Boom, man. 15% return within a few hours. Now, I didn't go and cash out or anything on it because I still think there's a long way to go, but I am still deploying money into places. I'm not cashing out. I'm getting in because I'm confident in what it is that I am experiencing, seeing, and knowing about monetary policy. I'm good, man. I'm ready to do this. All right. Do you think it's a good idea to trade options based on, where did that go? Based on when they use their words to stimulate the restrict? It seems like a good pattern to catch. That's entirely up to you, man. I don't know. I personally, I go into things that I know, right? The things that I understand, the things that I'm seeing personally. Now, I don't suggest anybody else do what I am doing, but I give you my ideas on what it is that I am doing so that you can use it for your own strategies, whatever, right? I don't try to say, hey, this is a good idea or a bad idea. I don't try and do that. And I'm certainly not an investor who says this is the way you need to invest into these companies and this is the way that you look at their, you know, stats or whatever. I don't do any of that stuff. That's not me. So when I think about what it is that I'm seeing from monetary policy, I think to myself, is this going to ease or tighten financial conditions? What will that do? Right? Because if it eases financial conditions, most likely you're going to find things rally, like in certain areas. If you ease financial conditions, people are probably going to start borrowing money to buy a house. If you got people who are borrowing money to buy a house, most likely you're going to start finding stimulation taking place within the economy, as generally most people who move into a house start working on it, start changing it around, buying new furniture, buying new paint. They start doing things to that house. This is economics that are now flooding beyond just the purchase of the house, but now moving into the broader economy. Right? So as I think about these things, these ripple effects that happen, I really have to come down to, is the financial market tight or easy? When you raise the neutral interest rate, it will ease the financial conditions. If you put the expectation that there's going to be lowering of interest rates, that will ease financial conditions. You will find more people participating in the economy. You will find more people going out there to try and buy a house. And this is what we are experiencing from it. How it is that you position yourself for it is entirely unique and up to you. Right? Now, things may change going into the future, and we'll recognize that. As the market starts to rally, we may find that the Federal Reserve will say in September, hey, because all this rally and the easing in the conditions and the people going out there and borrowing the money, we may have to wait. We may have to wait. We're still, got the credible threat of tariffs. We may have to wait. What is that going to do to financial conditions? It's going to tighten them immediately. People are going to be like, oh, damn, right? And then you'll find the conditions tightening. Right now, they're getting easy. They haven't done anything to change, right? All right. What time is it? 11:38. Andres is not about being mad. Yui is just out here deciphering the propaganda and speaking plainly about what to expect. Yep, absolutely. I get excited because I drink a lot of caffeine, and when I start diving deep into this stuff, and I get excited about seeing things that other people are missing, or at least I have been sharing for some time that nobody else has done, and then boom, there it is, exposed in every way. All right. Hey, Hyder, hope you're staying cool. Absolutely. Free market is more ideology than reality, but I'm still going to fight for the concept. Prices are about to skyrocket. I want more than free market. We should put an end to socialist programs. We shouldn't have taxes on our property. Why am I paying for public schools that I don't agree with? I've only owned it since the April tariff scare. Not sure when I'll sell, but should take profit soon. What position was that? Alright. Our monetary policy is an elevated inflation to keep the system going, is what you're saying. Why should we be mad about it if the alternatives are worse? I don't think anybody should be mad about it. I don't think anybody should be mad about it, but I think the idea that most people who are going to be suffering with the elevated inflation are not going to understand what is happening with monetary policy. They will then experience this pain and not understand that they didn't position themselves in order to deal with the consequences of it. The Federal Reserve, the powers that be, know that's going to happen to those people, right? I mean, I understand education is your responsibility. Like, you have to go and educate yourself on this stuff or you're going to suffer the consequences from it. But ultimately, if there's a group of people out there who know that you don't know, and then they're going to do something that is going to create pain and suffering for you, and then not explain it as they are trying to save themselves, tell me, like, what is this going on? I mean, I saw it coming. I'm not afraid. I'm not worried. I didn't think that I was going to destroy my world. I was very comfortable with everything that I was doing as far as the position that I was taking and everything that I had going on. I was not living in fear whatsoever. People who had no understanding of monetary policy or what was taking place said, money print to go burr, prices go up, I am losing my life. I am losing everything that I have going on. And they were in that condition because they had no clue of what was happening. And the Federal Reserve knew that they were going to experience that and said, hey, I know it's hard on you guys because a lot of it has to do with the way that you positioned yourself, but if we don't do this and cause this pain and suffering to you, we're all going to fail. That's no good, right? I mean, yeah, you guys are kind of already like on the edge of failing, but then we would fail too. We don't want to fail, right? This is the Federal Reserve saying this. They saved themselves by causing pain and suffering to everybody else. If they didn't do that, they would have failed too. So it was for the greater good. It was sickening. It makes you want to throw up, you know? Is the Suburban a 15 or a 25? It's a 15. Simon, poor people live paycheck to paycheck. Do you think they got the finance to position themselves to win from the Fed decision? Do they have the finance? If you are living paycheck to paycheck, you are absolutely in a position in which that you can do something about it. If you have any kind of flow coming in, you can figure out how to cut back on your expenses one way or the other. People say they can't. I'm already living the bare minimum. I don't agree with that. I think that there's probably places that you could go to find that you could cut back on your luxurious experience or your comfort in order to acquire more of your paycheck. When you get more of your paycheck, you don't deploy that into comfort, luxury. You deploy that into return on capital investments. Anybody can do this. You can download many online brokerages and you can buy stocks and bonds and assets and all kinds of stuff literally $5-10 at a time. Those people who are living paycheck to paycheck are absolutely in a position to deal with it. They choose not to. They already suffer in pain and they don't want to inflict any more pain upon themselves, and that's what the problem is. All right? They don't want to go out there and spend extra time to earn extra money, the money beyond the money they already make, and they don't want to cut back on anything that they are doing. They could absolutely combat this. They choose not to. Right? I mean, otherwise I'd be driving a brand new BMW right now, or a Camaro, or a big old giant pickup truck or something. Right? But no. I'm trying to get in the flow and make sure that my expenses are incredibly low so that I can position myself to deal with all this stuff, because the pain and suffering that they're inflicting upon the people is going to be very difficult to move back from. If you are down there at the bottom end of the line, you know how difficult it is to try and acquire what it is that you need in order to have what it is that seems to be a decent way of life. It's almost impossible. Understanding why it's impossible then gives you a much better reality to face, which is cut back on expenses and increase your income. That's the only thing you can do. And a lot of people get mad at me. They're like, oh man, you're just part of the elitists wanting everybody to work extra hard and, slave away and do all this other stuff. And I'm thinking, well, no, what else are you going to do? Right? I mean, what else are you going to do? You're going to sit there and wait for somebody else to make a better time for you? You're going to sit there and wait for a politician to figure it all out so that you can have a decent way of life and work 8 hours and not have to put any more effort in and not have to cut back on any expenses and not have to stress or worry about the entire world? It sounds like a great place. That doesn't exist, right? That doesn't exist. It's like survival of the fittest out here. People don't want to believe that, but that's the truth of it all. All right. Hey, another $2 from Statistic 4009. Thank you so much. Increasing wages, cut on expenses, and buy assets. It's simple as that. 3 steps. All right. However you can figure that part out. Increase your wages, cut back on expenses, and buy assets. That's it. If you do not do anything other than that, then you're probably going to end up suffering and blaming other people for your misfortune. All right. How many people called it flexible average inflation targeting and wouldn't let it go? How many people said it over and over again? The Fed is not going for a 2% target. They want moderately above 2% for some time. How many people incorporated that into their decision making when it came to investments? How many people looked at the economy and said, holy crap, with tariffs and the credible threat of tariffs and the idea of inflation will raise the neutral interest rate, making the economy less restricted? How many people position themselves to deal with that? I did. It's the only thing I know. How else would I deal with it? Like, I got all this understanding of it, and I'm thinking, well, I'm going to set that all aside and position myself differently from what it is that I believe and see that's going on out there? Of course not. Right? Everybody has to figure this stuff out for themselves, I guess. Nah, I'm a slave to the other people's kids. Didn't Powell hint at rolling back average inflation targeting today? Yeah, the new consensus statement is coming out, guys. But up until today, or when that statement, not today, but whenever that statement comes out again, up until even today, they have been going for average inflation targeting. Will it change? Probably. But the consensus statement has to come out. They have to give the statement. Until then, that's what they are going for. Flexible average inflation targeting. The new statement will come out here very soon. And when it does, we are going to read through that thing word for word and break it down so that we understand what the new strategy for the next 5 years is going to be, so we don't miss it like 99% of the people did over the last 5 years. Flexible average inflation targeting, moderately above 2% for some time. Bang. Man, isn't that what happened? I mean, it's not like anything else happened. That's what happened, Generic groceries, shorter showers, monitor electricity use, All right. You have to own real estate and stocks. I agree. F Kamala for the $1.99. Thank you. I don't really get into hating politicians in such fashions. I get irritated when I see certain things being stated out there that are completely, obviously superficial BS that doesn't have anything to do with anybody's lives, and it doesn't help or it's more about distraction. That upsets me about politics. That distraction, that look over here, not over here thing, that is what screws people up. Following politics is probably the worst way of understanding economics. Vote with your dollars, absolutely. Infinite goods and service divide by 21 million is all we need to know. Bitcoin, you're either figure it out what it's taking over, or you suffer the consequences. um I'm gonna agree with like 50% of that. Here's the problem that we're gonna end up facing with the idea of cryptocurrencies or Bitcoin or gold or anything else with a limited a limited amount, is that Gresham's law kicks in, right? So if you have two currencies going on at the same time, fiat and Bitcoin, well, fiat is bad currency and Bitcoin would be good currency. Gold would be good currency. These are the good currencies. Fiat's bad currency, ever amounts of printing, devaluation, all that other stuff. So when you think about it, dollars are bad currency, crypto, gold, that's good currency. Now, if you came to me and say, hey man, I want to buy your computer there, right? And I said, sure, no problem, I'll take whatever you got. And you put Bitcoin out there or cash and says, hey, which one you want to accept? And I say, I'll take either one. Are you really going to hand me the Bitcoin or gold? Or are you going to hand me that cash, those dollars? You're probably going to hand me the cash or dollars and keep the Bitcoin for yourself, because that's the good currency, right? Bitcoin gets hoarded away and cash moves into circulation. So now let's take it a little bit further than this and say, okay, so cash fails. Like, dollar doesn't exist, nobody's using it, it's completely gone, central banking has failed, all that other stuff. The only thing we have is gold and silver or Bitcoin. Right? Now, this is called Thayer's Law. Thayer's Law says that once the bad currency has completely collapsed and nobody is accepting it, which is not the case today, right? People want to believe that's the case, but that's absolutely incorrect. We have very high dollar demand. We have more people who are issuing out dollar-denominated debt today than at any time in history, and there's more demand for U.S. treasuries now than at any time in history. And as much as people don't want to believe that, just go and look at the foreign holdings of U.S. treasury assets. It's higher now than at any time in history. Of course, it also has to do with the amount of debt issuance that's come out. So understanding that, right, that once this fiat currency has completely collapsed, now Bitcoin and gold can come into circulation and be used. Another problem kicks in, right? And that's Cantillon effect, because the most industrious nation is going to export products and import gold and Bitcoin and hoard it for themselves, denying the rest of the world the ability to do transactions, and they will fall into depression until the most industrious nation who have hoarded onto all that gold and Bitcoin have to go through the consequence of redistribution of wealth as they relinquish it back out there to the rest of the world. Booms and bust cycles, massive depression, starvations, all kinds of hell breaks loose during these situations. Now, understanding that being in gold and silver and Bitcoin will give you the absolute best opportunity during these times, I get it. Like, I think I do quite well during that, but the majority of the people are going to suffer in pain and misery. And if you're looking forward to that, I'm going to have to back away. I'm going to say I'm not, right? I know how to deal with the situation, and I know how to deal with one that it collapses. I mean, I would like to think I know how to deal with it. I don't know, right? I mean, I guess time will tell. But at least I have thought about it and positioned myself in a way that I feel that I can deal with any kind of situation that comes, including a collapse of the financial or central banking systems. Most people, the majority of the people, like better than 99% of the people, will be pulling their hair out and they'll be freaking out and not having any clue of what to do. It'll be a chaotic experience. Don't expect it or hope for it. All right. I gotta go, guys. This was a lot of fun. I really appreciate everybody being out here today. We got 43 minutes into this, 296 likes, 296 people with 76 likes. Thank you so much for hitting the thumbs up button. We got $13.97 in super chats because you guys are always so very supportive of this channel. I can never thank you guys enough. I do it at the end of every video, but I really do appreciate everything you have ever done for me. Being consistent with the Uneducated Economist channel, thank you. The fan base that I have here is just, it means so much to me, and I really appreciate everything, right? We're breaking this stuff down, we're internalizing it. We know that the credible threat theory is alive and well. It is playing out. Very few people see it, very few people understand it. Those who have internalized it and have tried to share it with their friends and family, we're on it, right? We're on the ball. Way more so than a lot of other people are. Uneducated Economist. You guys let me know.